Good day, this is Mark Giambrone from Barrow Hanley. Since the last time we were together, there's been some significant volatility in the market. Now, volatility really is based on some good things and some bad things that are happening in the background. So let's discuss those and talk about how we're positioning the portfolio appropriately to handle those things as we move forward. Clearly, the inflation rates are now higher than the Fed is comfortable with and proving to be more persistent. Because of that, the expectation now is that rates will rise over time is also putting pressure on the market. There's some concern around where the coronavirus is headed, whether it's a new strand or whether it's because of the growth scare and some of the shutdowns as infection rates are rising across the globe. So as we think about those things, on the negative side, they're persistent. But on the positive side, and one of the reasons why we're having higher inflation rates is because we have very strong underlying growth. So we have strong GDP growth, we have strong earnings growth, we have strong employment growth. And that can lead to companies having very positive outcomes and returns as we move forward. So the way to think about this is we have to position the portfolio so that the companies that we have can deal with an inflationary environment. And how do they do that? Well, some of the ways they do that is to have pricing power, meaning they can push through costs to their customers. They can be in a unique business, an oligopoly, or a business where they're a small portion of the overall costs of the end product, and therefore they can push pricing that way. They can also have unique innovation, and they can have a unique brand that will allow them to push prices as we go forward. So we're thinking about how to advocate for those things within the portfolio relative to our valuation. When it comes to the virus, it's difficult for us to have a unique insight into that. So the way to deal with it is to take advantage of the volatility on the downside, to make sure we're populating the portfolio with the highest quality names possible, and to stick to our discipline, which is to think longer term, and therefore continue to position the portfolio that way to move forward through any volatility in the market caused by the virus so that we can win and outperform over the long term. Thank you.